Welcome to the Mining Store podcast, Australia's #1 crypto mining rig solution provider, covering the latest news and insights into macroeconomics, cryptocurrency markets, altcoin news, and technical analysis. And now, without further ado, let's hand it over to the miningstore.com.au team.
G'day everyone, welcome back to another market update by Mining Store. Today we're going over to Taylor first, who's going to go through some community questions. We've got some mining questions and some ETH merge questions, which is great. We'll then be going into a miner market update. So we're talking about the new models that we've had landed our facility finally, which is awesome. They're in the process of being set up now, so I'll give a bit of an update on that and other miners that we have on offer at the moment. Theo is going to jump in and give a bit more of a broader market update of what's going on, what's happened with the network hash rate, a couple other things going on there as well. And then we'll be jumping across to Tony, who's going to be doing a general global market update. And then Mitch will be finishing off with the fundamental crypto, both on the trading side and the fundamental side as well. So let's jump straight into it. Taylor, do you want to go through the community questions?
Perfect. Alrighty, so we've got one in today that's about the ETH merge. So with the ETH merge, roughly around a week away, I think it is, should we be holding on to any or wait until the dust settles on the 13th, 15th area?
Yep, cool. So I'll just quickly share my screen. So quickly for this. There we go. So has that come up? That's come up?
Yep.
Great stuff. I found a thread from Bobby Ong, if I pronounced that correctly. He's the co-founder and CEO of CoinGecko. And I guess a lot of people would probably be asking these questions themselves, not just our clients. You know, what do I do with my ETH? What do I do approaching the merge and whatnot? And he put out quite a good thread, I thought, which you can see here. So if you want to pause it and take a read, go ahead. But yeah, here he just explains, you know, what you should be doing with your tokens. Obviously, you've got a hold ETH that supports the fork. Talks about full custody and whatnot. You can bridge all your tokens back to the ETH mainnet. There's other protocols here. So one in particular that for those that are involved in DeFi is removing your liquidity from DeFi protocols. This is probably a super important one for those involved in that. You don't want to get stuck in a messy situation where you're chasing up, different DeFi protocols for your ETH and whatnot, or worse, losing it. But yeah, there's a number of things he kind of suggests here that you can go through. There's a number of different things you could do. Just the last one, because we've kind of discussed it a fair bit. I know Tony's mentioned it, even myself have mentioned it. You know, it's buy the rumor, sell the fact. I think if you're holding ETH, you know, the end game, particularly for us trading academy holders, is we don't really engage in the short-term market as such. And, you know, if you're holding Ethereum at great prices, you should be holding it well beyond the merge. I wouldn't be looking to try and get cute and, you know, quickly sell your ETH on the rush up to the merge and hope to, you know, buy back in after if it's lower, because that's just a guessing game. So, yeah. Take it easy, read through this. I'm sure there's some other stuff you can find online. Will, you had something to add about it as well?
Yeah, no, that's a really good summary in terms of what you need to do. And, you know, it's not a matter of just sitting on your hands. There's not too much involved there. But yeah, I mean, it's also important from a trader's perspective. I think that's the other half of the question. If, you know, should I hold it? Is it going to rally massively? Is it going to dump? What's going to happen? It is important to realize exactly what Mitch said there, that it is a bit of a buy the rumor, sell the fact type issue, or not issue here, but scenario. And what we have really seen is ETH has had a massive run. You know, before we saw this kind of global market change in the past coming, you know, 2 or 3 weeks, with Powell coming out and, you know, really officially saying that interest rates are still going to be pushing on, you know, causing the market to dump. ETH was actually rallying quite ahead of the market. So it has had quite a pump. Just be aware of that. If you're expecting it to just fly to the moon straight after, I mean, it may be, but yeah, just be aware that, you know, it probably has already had that rally into the event. So I wouldn't really comment too much more on that. Really, we're more long term around here anyway. Long term, I'd say you're in a pretty great position if you're buying ETH at these prices, no matter what. Coming into the next bull run, we should probably see ETH, you know, well above its previous all-time highs anyway. So don't get too cute with it, and just make sure you follow those steps in terms of setting yourself up.
Perfect.
For sure.
Another one that's probably a little bit more complex relating to mining. So this came in from someone who purchased miners with us a while back. So they're currently mining from home. He's offsetting his power with the solar that he put onto his roof. However, with the energy prices going up, his average cost was around 20 cents AED. With the way things are going, it's looking likely that the price will reach 25 cents per kilowatt by the end of the year. What are his options? What should he do? It's a pretty complicated one, again, really, isn't it?
Probably in my domain again. So this is something that is probably the most important part of mining. Obviously, it's really just a competitive game of who can get the lowest energy prices, and that's really going to determine who's going to be put ahead first. So that obviously, on top of getting cheaper hardware, is important. But to answer the question directly, if you are in any situation, and we know a lot of people in Europe with the European energy crisis, and even Australia, where your mining profits have come down, not only because of BTC coming down, but because of energy prices. Obviously, the main solution is to lower your energy prices. And how can you do that? We strongly recommend for these reasons to take our hosting opportunity to start with, not to obviously rub the salt in the wounds here. But this is one of the reasons we do it. We're obviously using megawatts of power, and for that reason, we're able to lock in, rates at a longer duration. Things aren't as volatile on energy prices, especially because they're renewable. We're not as affected by this energy crisis as much as other people are now. So to provide an actual solution here, your best bet is probably to either look around. There might be hosting facilities in Australia that could take on, if it's a small amount of miners. We currently don't have some in Australia. Or contact us and we can see if we can arrange for your miners to be shipped to our US facility. Currently is about 13 cents. Bear in mind that's when you purchase miners through us. If the miners were previously purchased through us, then we should be able to help you out there as well. Maybe a little bit higher than 13 cents, but we should be able to kind of get that mark for you, which sounds like it's a lot better than the 25 cents that you're going to be facing anyway. So if it's 14 cents or whatever, sounds like a better solution long term. And just the final bit there, just to tap on, if you go on our website on miningstore.com.au, and at the very top, there's the facilities tab. You can have a look at the 7 major benefits of hosting. You don't have to deal with the noise. Your power rates are a lot lower. You've got maintenance on site. There's a whole range of things there. So just go and check that out.
Perfect. All right. That's all the ones that I've got for today.
Beautiful. We'll go into a minor update just to get that one out of the way before we go into the market update globally and crypto based. So just an announcement out to everyone there. So a lot of people have purchased hydro miners and S19J and S19 Pros in the past month or so, or maybe 2 months. They have finally arrived at our Texas facility, which is great. We're now in the process of setting all of those up, which is awesome. We expect them all to be online within the next kind of 5 to 10 days. So just bear with us at the final hurdle there, almost online. I know there's a lot of people looking to buy some more miners once their miners go online, and we understand that. So we're all on the same page there. So that's a really good update. In terms of what we still have left, we have, I think, maybe 5 or 6 hydro miners left, with maybe 2 or 3 people looking to pick those up. So if you are looking to get onto the hydro miners, this is probably your last chance before next year to do so. So contact either Theo or Taylor or Tony, and they'll help you out with that. In terms of S19 Pros, from the batch that have arrived at the facility, we probably have around maybe 20 or 30 of those left, which is not many. They'll get snapped up pretty quickly. So if you're looking for that lower cost entry point, that's a great miner there that was selling at around $20,000 previous bull market, and you can get it for around 6,300 now, which is really awesome. Outside of that, we have a bunch of secondhand miners that clients are looking to sell. If you're looking to get into the market, some of them come at around a $2,000 price entry. For example, we've got 4 T3 Plus miners. They're $2,500 or $2,200 each. They are 14 months old, but in terms of just getting your toes wet, if you haven't mined before, that could be a really good opportunity for you to get a taste of mining. I won't go through the full list of secondhands. There's not too many. It's probably about 10 or 15 miners there total, but they do come at a cheaper price. So The other thing that we want to tap into with the miner market update is what's going on with the European energy crisis now, how that's going to affect things. Theo's actually going to go through and talk a bit more about the network hash rate. For those who haven't, I suppose, been paying attention, and the network hash rate is actually pretty much at all-time highs right now. Now that's probably due to miners like the S19 hydros that we've received coming online, new generation miners coming online. Now, outside of that, can we see the network hash rate come down from here? We do feel that it could come down with this energy crisis. Obviously, when new miners get delivered to you, no matter what the situation is, you're going to set them up, you're going to put them online. And we do think there should be a few people out here probably powered down a little bit, given BT's price now. But I'll hand over to Theo to go into more of an in-depth update across there.
Yeah. So yeah, following on from last week, we're obviously seeing a quite a big spike on network hash rate and difficulty, which again plays into what Will just said. New generation models coming online, and obviously there's a pool of old generations coming off as well. But for the most part, we're seeing a little bit more people or miners being switched on, and I think there's also other contributing factors as well. Some of the things that I've sort of found online, Intel had sort of delayed the fabrication of their new chips for their ASICs. And we believe it could be the fact that obviously Bitmain's latest models like the XPs and efficiency and stuff is sort of potentially edged them. So meaning they've potentially gone back to the drawing board and reassessed a few things, which sounds about right. Being a publicly traded listed company in the US, they probably want to come into the fold quite well. So yeah, that's some good things. So good to see some people like Intel having some competition in the market, which is good for us the miners to improve certain things about not just Bitmain being at the forefront. And I guess also wanted to touch on some of the large scale miners. Obviously 25 companies went public last year just from Bitcoin mining. And we probably will see at least maybe one or a couple of them, be left up shit creek, just purely because of lack of experience through bear markets. I believe, where they've sold most of their BTC in their treasuries for cost or capital flow, and that they probably learned a valuable lesson through all that, because they could have sold during November, December and still been quite profitable. But having seen some of them sell, like I think their total treasury of like 10,000 BTC, which is enormous. So we could see a little bit more pain from some of these bigger guys. And then finally, another interesting one was, I think it's called Alpha Finance in the US. Basically, they've come out and they're offering 6% financing for ASICs. So it's the first time we've probably seen financing for ASICs at that level, a single digit. Usually it's in the teens. So yeah, it's another thing for new miners coming on board to actually potentially access that financing, which would be pretty good. And then finally, the last thing for me is myself. I think Taylor and will be in the Gold Coast for the Australian convention. So we'll be there. I think we're next to CoinDesk. So if people want to come in, say hello, I've been telling my clients as well that we're going to be there and have a stand there as well. And I think there's a few competitions that we're going to be running throughout the convention as well.
Yeah, absolutely. Great mention there, Theo. So it's good that we will be able to fly up and obviously spend some time at the convention. We are giving away an S19 model miner, valued probably around if you're getting it delivered to Australia, and it is going to be here, between the $5,000 and $8,000, and maybe even $9,000. So make sure you get down. You don't have to do much, just scan the QR code when you're there, and you can win yourself a free miner. So that's a good wrap up there for what's going on in the mining world. What we'll do is we'll hand over to yourself, Tony, there, and you want to give a bit of a global market update.
Yeah, sure. So I'll let Mitch open up his screen first so we can jump into some of the analysis. So I guess one of the major news stories since our podcast last week, from an economic standpoint, is probably the US unemployment. There was a slight increase in unemployment in the US on Friday night, increase from 3.5% to 3.7%. So although that on the face of it looks negative for the market, bad news in this case is actually good news for the market. So the higher the unemployment rate goes, it would edge the US into an official recession, so to speak. So it would help the Fed take a less aggressive stance on interest rates. So as unemployment starts to increase over the next couple of months, that will actually be positive for the market. Okay. Now, I guess if you're looking at the news, the mainstream media, the world appears to be in a bit of a mess at the moment. Obviously, the energy crisis, inflation globally, war, geopolitics, supply chain issues in China as well. So I think it's important to kind of take a step back and look at the data and what's actually happening behind the scenes rather than getting caught up in the mainstream news and the media. So behind the scenes, there's a I guess some could say that inflation has peaked and there's some underlying data suggesting that it has. So one thing you can look at is the shipping rates. And shipping rates have declined significantly in 2022. So the dry bulk rates are down as much as 89%. Container rates are down around 45%. So the sea freight shipping rates are an indication into the economic strength of the economy and the consumer's demand. So there are a few underlying data points suggesting that inflation has peaked and is coming down. But with inflation, it's kind of like a self-fulfilling prophecy. So if people think there's inflation and inflation is going to get worse, they're going to go out and buy as much as they can in the short term to make sure they've got food in the house. And, that ultimately creates more inflation as well along the way. So if people think inflation is going to get worse, then it generally does. And that's because people are going out and spending all their money to buy up all these goods and services. So yeah, it's a tough one. You have supply chain issues in China. You have obviously Russia cutting off the gas stream to Europe. So, a big energy crisis there as well. So yeah, it's a bit of a tough one at the moment. But all we can do is really look at the charts and, use data to kind of guide us. And if we take a look at the dollar index, there's two sides of the coin here. Mitch has shared a chart above. I'll let him go through that in a second. But if you want to go down to the chart that I shared initially, here we can see that kind of parabolic rally. We can see a bearish divergence on the weekly time frame. We can see a pennant structure on the RSI. So the RSI is becoming compressed. So there are some early signs that a topping formation is coming on the dollar index. There's also a gap in the market, which is yet to be filled. I think that might be the chart of the GBP USD, Mitch, but we can put the right chart up in a second. There is a small gap on the dollar index, and these gaps in the market are generally filled. So short term, we're expecting a small pullback on the dollar index. Whether that's a topping formation or just a small pullback is yet to be seen. We then want to go down to interest rates. So we do know that central banks are going to continue raising interest rates. And interestingly enough, the US Fed's fund rate has kind of broken out of this negative trend that they've been following for a period of time. But if you cast your eyes back to the left-hand side of the chart from 1960 to 1980, the interest rates were in a upwards trend. So there are higher highs and higher lows. But even when inflation was in double digits in the 70s, the Federal Reserve stepped in during a recession and slashed interest rates, to protect the economy. So we do know we're going into a recession, even though the official word hasn't been used just yet. So it's just a matter of time before the Fed does have to kind of pause to some degree, hopefully slash rates, which may give the market something to kind of cheer about. It's just a matter of when, in my opinion. But it does look like we may be going into a cycle of higher highs and higher lows on the interest rates moving forward.
Absolutely.
So just on the contrary to that, because technically looking at what Tony just said, it makes a lot of sense, but obviously there's always two sides to the coin with trading and you can get invalidated on ideas. But yeah, we still have this strong parabolic where it's kind of met that resistance that we talked about last week that comes from 2002 or 20 years ago. And I guess it kind of centers around what Tony was also talking about before with the wider market and essentially the energy prices that are occurring in Europe as a result of Putin strong arming kind of majority of countries that need access to gas and power and whatnot. So there's kind of two options here. I think, let me just double check. Yeah, so essentially, what makes up the DXY that probably a lot of people don't know is that it's 58% of it's actually made up by the euro. And so in a situation like this where there's essentially a wrecking ball for these emerging markets, it's actually going to cause a lot of these countries that are dealing with rising consumer prices on energy to default on their debt. And this will actually force them to sell US bonds, which in exchange for US dollars will be required to defend their currencies. So obviously the huge purchasing of the US dollar will only inflate it more. You hear heaps of people talk about it. It's got the potential to go up to that 120 range. I don't think that's insane to say if we do see the other side of the coin, because who's to know what Putin does? Who's to know when this war ends? Who's to know when the energy kind of fiasco ends? And until kind of fundamentally we see a shift in that, then I can't see a huge change in the DXY unless obviously technically a few things play out and there could be some changes with interest rates and whatnot within America itself. But on a global scale, it still kind of looks a bit bearish. But yeah, we'll obviously update you guys on that as it plays out. Just going backwards, sorry, because we did just cover a tiny bit of technical stuff. There's just a few fundamental things as well. This is just, if you want to pause this and read through it, it's just an article on Australian State Police now setting up a crypto division to trace transactions. I wrote an article probably a week or two ago on the government and kind of them stepping up to prevent cryptocurrency scams in Australia. I believe they're very prevalent. As the adoption increases in Australia, there's probably more and more people falling for these type of things, which is a bit of a stain on the industry. But nevertheless, it's a reality. So it's good to see that the AFP and the government are kind of, still looking to regulate the market properly. So people can enter and these things don't happen to them, because the last thing we want is more and more adoption and then people hating the industry because they've been scammed out of it. So. Yeah, that was really good. I did break this up into it just here. It's just kind of a little piece, and there's an interview here for our members that can click to watch it. It's just a macro analyst, talking about the efforts to kind of battle inflation by the raising of interest rates and whatnot. And essentially this kind of just generalizes, they're going to tighten interest rates until, something breaks or until there's recessionary enough conditions. And, at that point, like we spoke about this a lot, particularly Tony has, at the point in time in which the Feds do pivot and which we'll see relief. And, we at one stage, majority of people started to price in that it was going to be September. And that's probably where you saw, stock markets were picking up, crypto BTC went from 17K to 24K because as we were approaching September, and then as we saw, Jerome Powell came out and said, we're going to keep increasing them. And, BTC went from 25K to as low as 19.5. So, these are just things to kind of keep in mind. But yeah, there's an interview there if you want to watch it. Lastly, so I think today, or it's happening right now, is the last upgrade for the ETH merge. I know we discussed it just before, but Vitalik still expects it to happen between the 13th and the 15th. So, and the Bellatrix hard fork is happening today. So yeah, hopefully that all goes smoothly. And hopefully kind of, what is the date? Well, even this time next week, maybe the merge will be occurring as we're hosting the podcast. So that's exciting stuff as well. Once again, just some other general fundamental points. Sorry, I won't highlight that. Oh, can't click out. There we go. I think an important one is the EU voted down a Green Party proposal to research alternatives. Like the EU has been known to kind of hate on proof of work for those miners out there. And I think the other super important one is I can't recall her name, so someone else might know, but the UK's new female Prime Minister in the past has been super supportive of Bitcoin and crypto. I generally get the feel that the UK have been kind of behind and lagging a bit behind the US and AU, and they're a bit more standoffish to do with crypto. So I think this is going to be a really good thing, particularly if she still holds those viewpoints.
I think she said something today as well that was quite positive.
Oh, she did. Okay.
Yeah.
Well, that's great then. Yeah. So that's all well and good. Yeah, that's just the DXY stuff. I thought I'd do a bit different today, just for the technical thing. We often look at, like, 4 or 5 charts of Bitcoin and then 4 or 5 for ETH, but I thought I'd just revisit some on-chain analysis and indicators. People seem to really enjoy kind of, those historical pretexts on on-chain analysis and indicators. The first one is the hash ribbons. We have shown you guys that a few times. I think I brought it up for the first time 2 or 3 months ago. We mentioned it last week. It had that flashing buy signal. Here's just the Glassnode chart of it. You can see, I think I did originally have them circled when it did flash, but yeah, so for those that don't know, it's essentially just based on the hash rate of BTC, operates on the assumption that BTC reaches a bottom when miners capitulate, and that's what this indicator indicates. So if we go back to here, this is the whole capitulation of miners turning off as BTC's price, dumped from here to here. And yeah, obviously, as we even discussed before, with all the new miners turning on, that's probably why this indicator is flashing by now, because of everything that's happening. But yeah, that occurred on August 21. It's still kind of a watch this space, because it's been very good at picking the bottoms in the past. But yeah, we'll continue to monitor it as this landscape macroeconomically is obviously a lot different to the last few times that it's picked the bottom in pretty good conditions. Yeah, just the pure multiple. What you want to focus on here is this kind of green area. And it measures also the health of Bitcoin miners by using the 365-day moving average of the daily issuance value. So historically, the values in this green section here between 0.3 to 0.5 have marked out the cycle bottom. So you see here, we go on a run, comes back down, green, go on a huge run, and whatnot. And we've actually, yeah, it's just another indicator once again that's flashed by, because it's come down lower into that green area between 0.3 to 0.5 and visited it again. So just another one, another signal flashing there. And then just lastly, realized losses. So this is the Bitcoin denominated realized losses in the history. So it's only actually moved above 4 Z-scores, doing so in December 2018 and March 2020. Both of these periods are actually marked bottoms for Bitcoin's price. And what it's done here, it's actually reversed to the mean, but an upward movement is yet to follow. So just something else to keep an eye on. But yeah, all these indicators, obviously, as we say, take with a grain of salt, but they're all indicating we're either there or we're fairly close to a market bottom. So something you can couple with your technical analysis to build your biases and to plan ahead. But yeah, good things to keep in mind.
Sometimes it's good just to turn the fundamentals off a bit,
Yeah.
Yes, there's this dooming recession. Yes, there's this, energy crisis, there's war, all this and that, but, life goes on, and we tend to get out of these situations. And that's kind of what we've been telling everyone, and particularly on the Trading Academy, our members, that, from an investment point of view, the prices that are available right now for Bitcoin, Ethereum, even some altcoins, they're not going to hang around for another 6 to 12 months. So overall, good to just turn that off. Sometimes look at these indicators, and as Mitch has said, that they've timed it really well in the past. Rely on those a little bit more rather than getting sucked into feeling horrible about markets and missing opportunities.
Yeah, for sure. Just quickly moving on to Bitcoin. Yeah, I still really like this idea of this kind of Elliott wave count to swing low, retest those prior lows. Obviously, the potential for this to play out would require a midterm rally kind of towards the end of the year. We obviously don't know if that's on the cards. It's looking a bit more unlikely now, given what the Feds want to do with interest rates, but technically anything can play out. And most of you know Bitcoin has a mind of its own. So just something to keep in mind. I won't show the bear flag and all those other charts today to clog it all up, but you guys have seen them 100 times. That's including the harmonic shark pattern. Those are just continuing to play out day by day as they're all kind of medium-term patterns, trading patterns. So there's no point in visualizing it right now. But just in the short term, Bitcoin's kind of found this range. And I don't know whether any listeners were watching Bitcoin's price while they were working today, but Taylor certainly was, and he saw the bull trap happen live.
Quite interesting.
You saw Bitcoin kind of fly up here. I don't know if you can see on this chart, but it's one big green candle and one big red candle the whole way back down. So yeah, well, essentially what happened is I've zoomed in on the chart here. This range here, so this kind of price action here is exactly here. This is on a 5-minute time frame, so you can see like kind of in the space of half an hour, we went from 19.7k off the 0.786 fib all the way up to the 382, and then within about the same time frame came all the way back down. So yeah, just really funny price action. But yeah, I think for those that are in the short-term market that are either leverage trade or look to make a quick buck in the short-term market, this is the type of stuff you've got to be looking at with Fibonacci retracements and those smaller ranges, because you can really look for stuff off the top of the range or at the bottom of the range on these lower Fibonacci levels. So
on that one, Mitch, usually if you go to the chart, what's happening in these situations, I mean, the platforms that have the most coins available and can push the markets most tend to be exchanges. And what we can see happen here is that they can see where people's shorts are, or longs are, and what they're wanting to do is push the price up massively. And then all these people that are shorting, they're hitting stop losses, and these exchanges are making money. And then obviously once they get to a certain level and they've taken out enough people on the book, they can then dump the price back down and kind of do the short and make money on both ways. So usually that's kind of some sort of manipulation. We see big rallies into big dumps like that.
Yeah, it's a great point just for those even starting out in short-term trading. Is more often than not, you'll do a trade setup idea, and that'll exactly happen. You'll see this kind of artificial push that wicks up to take out your stop loss, and what's happening there is you're reading the same charting patterns as everyone else. So everyone else has got the same stop loss or the same take profit, whatever it is. Yeah, exactly what we'll describe is more than likely not that's what occurring. So
the technical term for it, if you want to research it more, is called stop hunting.
There you go. Now, just quickly for Ethereum, yeah, we floated the falling wedge last week. I think we showed that for the first time then. Yeah, this is kind of validated, and I mentioned it could invalidate our head and shoulders bearish pattern at the same time. So this was kind of a negative trend line. You can kind of see multiple touches as we kind of went down with this support line here that created the falling wedge, and we did break out, and we have began to trade above 1600 quite cleanly. Like, I mean, BTC is almost at the bottom of the range right now, and ETH is 1653, so trading above. So yeah, technically, like this breakout, the breakout should be up here around 1880. Anything can happen between here and then. There's obviously multiple levels of resistance that I haven't shown here, but you can expect it to push up there if we do see a true bullish reversal from the falling wedge. As a result, it didn't actually fully invalidate the head and shoulders pattern. We have kind of broken out here, but for this to continue to play out, and I do want to mention that I did slightly redraw this as I kind of rushed it last week and drew it a bit incorrectly. But yeah, what we would have to see here for this to continue to play out in a bearish sense is get a reversal of price down here. If we obviously continue upwards, that's when it would be invalidated, but that's just another medium-term chart that I can kind of continue to show you guys. And here's the neckline, so that's where we would have to kind of break down to. But that's it today on the technical side of things in the market. For those Trading Academy members, we obviously got a lot of buys out last week. They're currently, I think, going pretty well considering we're at the bottom of this range. They're either slightly in profit or around the price we bought. And then obviously that buy we had a couple of weeks ago is actually moving really strongly so far. So yeah, that's it from my end.
That's good. Yeah, as Mitch mentioned there, we got some buys out in an industry that we've been kind of focusing on and we've talked about in this podcast series. So we're looking at that kind of gaming metaverse, sector of the cryptocurrency industry. So if you're not a Trading Academy member, you can get in touch with Taylor, Theo, Tony, or you can go onto the website and find out a bit more about that and gain access to our trades there. So jam-packed episode there, guys. Really well done. We'll be back next week unless anyone else has anything else to add on there.
Not me. Thanks, guys.
Thanks, guys.
Cheers.
Cheers, guys.
Peace
Just
out.